Hello everyone. Have you ever wondered why gold prices change every day? Or who decides that today gold is 98,440 Indian rupee per 10 grams and tomorrow it's 99,000 Indian rupees? Well, the answer lies not in your local jeweler but in London. Welcome to Intellect Insight, where we decode the financial world for you. In today's video, we will see how gold prices are set globally. Now, we will see first global benchmarking. Now, you might be wondering what it is. So, gold prices around the world are anchored by one global benchmark, the LBMA gold price. So, this is the one who decides the gold price. Now, LBMA stands for London Bullion Market Association. This is the full form of LBMA. Twice a day at 10:30 am and 3 p.m. London time, a group of powerful banks and financial institutions sit in a digital auction and set the price of gold in US dollar per troy ounce. So usually it decides in US dollar per troy ounce. Now, you might be wondering what is troy ounce? So, 1 troy ounce is equal to 31.1035 grams. Now, whenever you see a troy ounce on websites, blogs, anything, then it's the basic calculation which has been done by LBMA, and based on that gold prices has been decided. Now, they match buy and sell orders until a price is found. So basically buy and sell order until a price is found that balances the demand and supply. Demand and supply as the spot price. They match buy and sell orders until a price is found that balances the demand and supply. This is known as the spot price. Now, second section we will see about who participates in such auctions. Okay, so the price is determined by major financial players like JP Morgan Chase, then UBS, Goldman Sachs, then HSBC. They submit a bids on behalf of central banks. So here central banks are the banks of different countries. Let's say if you consider India as an example, then there is a Reserve Bank of India. In USA it's a federal bank. Like that, every country has their own banks. So central banks, investment funds, then miners and other traders. So basically, the JP Morgan Chase, UBS, Goldman Sachs, and HSBC submits a bid behalf of central banks, investment funds, miners, and other traders. This ensures the price reflects the global consensus and market sentiment. Now, we will see in section 3 the key factors in price, like how price fluctuates based on what factor in price. So there are several such factors based on which price of gold fluctuates. First thing first, it's the strength of US dollar. Like as we all know, mainly the trade happens between different countries in US dollar because it's a global currency and also well known. So price of gold mainly depends on the strength of US dollar. Then global inflation and interest rates. Okay, so nowadays, as we all know, the prices for groceries and etc things has been already spiked up. So it's a clear cut scenario of inflation. So yes, global inflation and interest rate of banks also depends on fluctuation in gold prices. Then geopolitical tensions and wars. Right now, as we are seeing the example of Israel and Gaza, the war is going on, because of which gold price are mainly stood up all of a sudden, and right now the, I would say, probably 3500 is the per troy ounce price for the gold. So this is the clear cut example of how gold price fluctuates based on geopolitical tensions and wars. Then central banks actions like buying gold reserves, and of course supply and demand. So anytime if gold price fluctuates, mainly the reason should be out of this of the things, like these are the factors based on which always gold price will be fluctuate. Okay, now you might be wondering about the result. So the result a global transparent price, but only in dollars. Now in section 4 we will see how local prices are calculated. Like this is the main important section for I would say domestic buyers, or let's say for weddings and marriages, people do purchase a gold. So how the price has been calculated since like decades. So here is a clear example of that. So let's say global spot price for gold is 2900 $11.16 per ounce. Okay, now if you convert this USD to INR exchange rate, then price would be in Indian rupees 87,000.0150. Okay, this is just an example, it's not a real prices right now. Now let's calculate. Just a second. Step by step. Okay, so first, if you want to calculate the price of gold, then convert to price per gram. Like per gram, what's the price, right? Now, as I just told you, the spot price was 2911.16 US dollar divided by, like, 1 troy ounce is equal to 31.1035 gram, right? So answer will be approximately in dollar 93.60 per gram. Just a second. Okay, now step 2, convert to INR, right? Now if you convert 93.60, which we got here, multiply 87.0150 per dollar rate, then the answer would be per gram 8,142 per gram. Okay, now third, add import duty. %. It depends on country to country. So 8,142 multiply 1.15, which will be 9,363 Indian rupees. Now in India, as we all know, there is a GST, so add GST 3%. So if you add GST, then after GST it will be, if you multiply 9363 multiply 1.03, it will be 9,644. Okay, now final price of gold per 10 grams should be 9,844 multiply 10 is equal to 98,440. This is the 10 gram gold price. That's what your jeweler charges. That's why gold is more expensive in India than in Dubai. Different tax structures and import duty. Tax structures and import duties. Because of these two, there is a price difference. Otherwise, it would have been same for different countries. And that's why the people of India usually tend to purchase gold from Dubai. Now, let's discuss in section 5 real-time fluctuation. Like India's price fluctuate every minute based on currency movement, currency movements, economic waves, economic news, then international events, even investor panic too. Like usually we have seen, if there is a war or something, investors over the decades tend to panic and they try to buy and sell aggressively, and because of which there is a huge fluctuation in prices of gold or shares and mutual funds, which we have seen. This is why traders watch the live gold price ticker just like a stock price. So next time you buy a gold coin or jewelry, remember you are not just paying for gold, you are paying for a complex chain of global economics, taxes, and strategy. This was Intellect Insight, where financial mysteries become knowledge. Thank you for watching this video. See you in the next video. Keep learning, keep hustling.